There is one acronym that everybody knows about, and that's HMRC, which even I know stands for Her Majesty's Revenue and Customs. But I'm pleased to... who's that laughing at the background there? But I think what I'm going to say is actually it's the nice bit of HMRC, because it's the bit of HMRC that can give you cash back into your business. And this is a key sort of, for cash-strapped biotech companies, is an absolutely fantastic bit of government legislation. So when I was in the biotech sector, I very much benefited from this. And so I'm very pleased to hand over to Annabel McLeod, who's going to talk you through the R&D tax credits. And this is where it really does get technical, guys. So thank you very much for coming.
Thank you, Mark. Yes, I'm Annabel McLeod. I'm from HMRC R&D Tax Credits, and as he's indicated, we're the part of HMRC who puts money in your company's bank account rather than taking it out again. I'm particularly pleased to have the opportunity to talk to you today because I think that what I would like to persuade you to do is to start thinking about R&D tax credits much earlier than many companies do. There's a temptation to think it's tax and you don't want to deal with it too quickly. Usually companies manage to file their R&D tax credit claim by the deadline, but really that's too late to be thinking about it sensibly. If you start thinking about research and development tax credits from the very beginning, as you're selecting the entity you're going to use to do research and development in, at the very beginning, as you're looking at funding and what funding you can get, then you've got a much higher chance of getting considerably more money by way of research and development tax credits. And unfortunately, very few of us have infinite sums that we can use to move forward our R&D or indeed anything else. This is just a quick overview. I've tried to create the slides so that you will be able to follow the links afterwards if you want to find out more. You're also obviously welcome to speak to me as well. There are research and development tax credit schemes all rest on a definition of research and development, which lies in what were formerly called the DTI guidelines, and are now called the BIS guidelines, following the Department of Trade and Industry becoming the Department for Business, Innovation and Skills. There is a specific paper written on the application of that to pharmaceuticals, and I've included a link to that. There are two research and development tax credit schemes. The more generous scheme is for SMEs, small or medium-sized enterprises. However, not all small or medium-sized enterprises are in practice going to be able to claim under the SME scheme. There will be circumstances, even in which where you qualify as a small or medium-sized enterprise, where you will be looking at the large company scheme. In particular, if you are acting as a subcontractor or if you're getting grants and subsidies for your research and development project. One of the first things to look at is whether the entity that you're using to do the research and development tax credit, research and development work, is eligible for tax credits. The most important thing to look at is it an entity which is chargeable to corporation tax? That doesn't mean you have to pay it, just that you have to fill in corporation tax returns with your losses. And is the research and development that you're looking to do, is it related to a trade carried on or to be carried on by the company concerned? I say company because the overwhelming majority of entities liable to corporation tax are companies. It's then important to look to see whether you qualify as a small or medium-sized enterprise, and also whether the company can in fact claim under the SME scheme. As I indicated before, there are circumstances such as acting as a subcontractor or getting grants and subsidies which may prevent this. Although in those circumstances, you will usually be able to claim under the large company scheme. R&D cash repayments are perhaps the most well-known feature of the Research and Development Tax Credit SME scheme. It works by surrendering your losses, which are enhanced under the SME scheme, to what's called 225%. That means that instead of getting 100% of your costs that qualify against your profits for tax purposes, you get 225%, which in effect is an additional 125%. But you can convert this 225% into a cash refund, and that's where the cash repayments come from. In deciding whether to do this, it's really important, I think, to think about projections which really echoes what I was saying at the beginning, that it's best to think about research and development tax credits, how you can qualify them, what you could qualify for them, how you're going to do it, how much you could get at the very outset. It's also important to start thinking about it because the decision as to whether you're going to surrender the losses for repayable credit might be quite sensibly allied to the question of what tax rate you anticipate your profits being taxed at. And there is something coming in which is called the patent box, which I would hope some of your companies will be able to qualify for, and that involves companies being taxed at only 10% on profits arising from patents. There are complex rules. I've included a link to what's going on. The Research and Development Large Scheme, that's the large company scheme. Traditionally, that provides a 30% additional enhancement for qualifying expenditure, meaning that you get 130% of the qualifying expenditure rather than 100% against your corporation tax profits. We have a new scheme called the above-the-line tax credits, brought in following feedback from businesses and on consultation, and we're looking forward to seeing how it works. The headline figures are that it will be a figure of 10% taxable, which in practice for most companies who are in a large companies or claiming under the large scheme in a position to surrender will result in a 7.7%, I think, on current tax rates. That's assuming corporation tax rate of 23%, which is the large companies rate at present. Cash, which can effectively be obtained instead of enhancing your losses going forward. There are some circumstances, well, there are quite complex rules regarding set-off, and if you want to look at that scheme, I would recommend that you study them before assuming that it'll just come in, because you will have to study the small print. Finally, I'd like to come to the patent box. As I indicated, the headline position of that is a lower rate of corporation tax for profits arising from qualifying patents. They're broadly speaking UK and EU patents. USA patents won't count. There are other countries. This is very much new. It's coming in in a phased way from the 1st of April this year. The full benefit of the patent box won't be available for a few years, but it is being phased in, and there will be some benefit almost immediately. I think it's important to bear in mind that because the patent box is coming in, as I tried to touch on earlier, it's worth thinking about your research and development tax credits. It may influence in some cases the decision as to whether you want to take a cash repayment rather than enhance your losses going forward. I've put up a slide now with more information. This is a slide really of giving you links to go to if you'd like to find out more information. It includes a link to an HMRC webinar, which I'm assured works. I understand that your computer does have to be enabled with a very recent form of Microsoft Windows and with media players. It was, however, prepared by my colleagues in a Research and Development Tax Specialist Unit. Finally, I'd like to go back to what I was trying to say at the beginning and to stress to you that I think the time to start thinking about research and development tax credits, however boring you think tax is perhaps at the outset when you're forming the entity, because then you can make sure that the entity that you're forming is an entity which in principle will qualify. And you can then, when you're looking at your sources of funding, try and make sure that your sources of funding do not cause you to accidentally breach the rules for what counts as a small or medium-sized enterprise. The actual limits for a small or medium-sized enterprise are very generous. They are the limits in the European Commission recommendation describing small and medium-sized enterprises effectively doubled. So you're looking at a total, including linked and partner enterprises, which is where companies can trip up, of less than 500 employees, 86 million euros of balance sheet assets, and less than 100 million turnover. These figures often seem very large to most people. What is important, however, is that you pay attention to the concept of linked or partner enterprises, which is inherent in the European Commission recommendation, which I think the slides show a link to. Broadly speaking, if any funding entity is providing you with 25% or more funding in one way or another to your entity, normally a company, you should be concerned, I think, to make sure that the benefit of that funding is more than the benefit of any risk that you might be suffering to your research and development tax credits. 10 minutes is far too short a time to fully describe research and development tax credits, but I hope that in the talk today I have given you enough to go forward to make you think, hopefully, about research and tax credits at a much earlier stage, and links to take you forward should you wish to do so. Thank you.